Think big, trade smart. This video is presented by Meitou Investing. Hello, what's up guys? Welcome back to another Meitou video. Recently, a lot of people came and asked me, what kind of stocks should we invest under the current sector rotation? I think this was a great question, which I have probably said more than 10 times since the end of last year. But there are always people who misunderstood me. Here I will explain it one more time. In my opinion, sector rotation is a long-term trend that will last at least for a year, not within weeks or months. So I don't think it's going to end very soon. On the other hand, any trend that is likely a year or longer doesn't move smoothly. There are obviously some fluctuations, up and downs and back and forth during this process. So what investors need to do is have a clear idea of what's going to be the long-term trend and not to get lost in the short-term fluctuation of the stock prices. Having said about the sector rotation, now let's talk about what the stock we should pay attention to under the circumstance. In this video, I'm going to talk about Costco. I just increased my holdings of Costco not so long ago, which I have been working on this video ever since then. And I wanted to share with you my understanding of Costco and my investment logic about it. I will be discussing what kinds of the company is it, and why would a company like Costco can be praised by Xiaomi's founder Lei Jun, and why one investment guru like Charlie Munger said he's willing to take Costco to the grave. First of all, you might be wondering, why would we want to know or even invest in a stock like Costco? I know a lot of investors, when they invest a stock, the first thing they do is not to understand the business model of the company or to think about the logic of their investment. Instead, they will Google and look at the stock's past price movements. I'm not saying that is completely wrong, but there are a lot of people taking the past price as a decisive factor. If the price trend is good, they will continue their research on it. If it's bad, then they would just toss it away. And this is what I think is the biggest mistake that everyone is doing. One of the biggest difference between experts and beginner investors is the different dimensions in which the way they look at investment. The beginner just wants to know, how much money will this stock make me and how much growth potential will it have? And while for the experts, they tend to think more. They care about within how long and how much development potential can this investment give in return, and how risky is it, any certainty about it, and the overall impact on their positions, and etc. For them, how much the stock price can rise often is not the most important thing, which it can be made up by some investment strategies and tricks. And that's the key of understanding and investing in Costco. If you simply look at the past price, it doesn't make it an attractive investment. Yet, it's because of its many features, make it a good investment that no one should ignore. For the rest of the video, I will introduce the investments of Costco to you from the three aspects of Costco's business model, investment logic, and risk. At the end of the video, I will also give you my investment advice on investing in Costco. Now, let's break down Costco's business model. Costco is a company that you are all familiar with. Even if you haven't studied it, you have certainly used it. I won't take the time to introduce the basic information of its business, such as the number of stores, which you can already get it from Wikipedia, and it's not worth putting it on a video like this. Now, let's take a look at what Costco's most important business logic is. To understand Costco's business model, one thing we must be clear is that Costco is not a normal supermarket, and they don't rely on selling goods to make money. I will go through it more later in details. Basically, the fundamental business logic of Costco is to make money by charging membership fees. In other words, the key to Costco's business is to make money by getting as many people as possible to subscribe to its services, which it offers cheap price and high quality goods. In comparison, this is very similar to subscription services like Netflix and Amazon Prime. So when we analyze Costco's business model, we should analyze it differently than a traditional retail company. And we also need to reserve some common stereotypes to truly understand what Costco has to offer. Here, I'd like to show you some data. As you can see, Costco's gross margin is more than twice as low as other retailers, and it stays around 11% year over year, almost never changed. So, why 11%? Well, it's not a coincidence. It's a deliberate planning by Costco's management. Let me show you another set of data. As you can see, the operating cost of Costco is around 10%, and the management deliberately chooses the gross margin of selling goods at 11%, which basically means that Costco does not intend to make money from selling goods at all from the very beginning. So all of the stuff that a typical analyst uses to analyze a company, such as looking at the volume sold, gross margin, profit margin growth, they don't work on Costco. There's one and only one stat that we need to look into for Costco, and that is the number of members. In order to understand Costco's business model, we have to start with how it attracts and maintains its members. Costco has a membership fee of $60 and $120. The only difference is that the $120 membership gets a 2% cashback. Even though that doesn't seem like much, but for Costco, it has more than 100 million members worldwide, which in turn gives Costco $3.5 billion in annual revenue, with a growth of nearly 10% a year. By looking at the chart below, we can also see that Costco's membership income is basically equal to its annual net profits, which further proves that Costco makes money entirely on membership fees. So, what does Costco do to attract members? I'm sure a lot of you who live in North America are probably familiar with it, and that is low prices. One of the ways that Costco achieves low prices is that, as mentioned above, it doesn't make money by selling goods. So then, it doesn't have to raise prices like other retailers do to make a profits. And because of this, customers at Costco know that they are getting good products at cheaper prices, and they're also in good qualities. In other words, Costco doesn't take any advantage of customers on prices. The other thing that Costco has done a really good job is keeping costs down. Costco's cost compression is divided into two aspects. On the one hand is the operating cost. On the other hand is the purchase cost. In terms of operating cost, Costco only offers 2 or 3 brands in each product category, and they all came in big packages. This means that Costco rarely needs a shopping guide, and it doesn't need many people to carry the goods. Costco stores are also its own warehouses, which allows Costco to cut down warehousing cost. In terms of purchase cost, we can see from the comparison between Costco's inventory turnover and its peers in the figure below, that Costco's inventory cost is as high as 12.3, much higher than Walmart's 9.4, Target's 6.9, and Dollar General's 4.6. The inventory turnover measures the retailer's speed from purchase to shipments. The higher the value, the faster the sales speed. This data of the 4 retailers basically reflects their bargaining power when facing suppliers in the retail industry, which it also reflects their positions in the industries. Why do I say that? Let's take Costco for example. Because Costco has the fastest sales, it makes the suppliers more willing to work with Costco. At the same time, Costco only selects 2 or 3 brands for each product, leading suppliers to step up their efforts to reach to Costco's shelves. To put it another way, as a supplier, the cost of not getting onto Costco's shelves is huge. This gives Costco strong bargaining power and the ability to get very low prices from suppliers. In addition to cutting costs, Costco has another tool that most retailers do not dare to use to achieve low prices, and that is selling at a loss. It's not the kind that occasionally attracts attention with a discount or anything, but selling at a long-term loss. For example, Costco only sells roasted chicken for $4.99 and hot dogs and drinks for only $1.5. In addition, Costco has many other services, such as cars, insurance, gas station, pharmacy, and etc., which are either unprofitable or even losing money. If you look at Costco with any normal standard of investment logic, you might think it's a bad company to invest. But when you understand the underlying business logic of a Costco, you understand that Costco doesn't make any money by selling goods, and this has very little impact on Costco's profitability. On the contrary, cheap prices have attracted many customers to buy membership, and a wide range of product categories and services, plus the consistent low prices. Costco has also fostered a strong user stickiness. Once you start using Costco, it's very difficult to leave it. For many years, Costco's customer resubscription rate has been above 90%, which further proves this point. So after talking about the business logic of Costco above, it can be seen that Costco is an excellent company, but you might be wondering, is it a good investment? So next, let's look at Costco's investment logic. As an investment, the most important feature of Costco is the depth of its moat. You can call it has the deepest moat in the retail industry. We know Costco's ultimate low prices comes from its business logic based on membership fees, which makes it almost impossible for ordinary retailers to compete with Costco on prices without the subsidy of membership fees. So if you want to charge membership fees to reduce the price of your product, you should at least be similar to Costco in terms of volume. You also need not to lose to Costco in terms of operation to make the similar economies of scale. Otherwise, Costco's competitors will die early on the mountainside because of losing money on selling goods. So you see, unlike Home Depot has Lowe's to compete, Dollar General has Dollar Trees to compete. It's very difficult for anyone to take market shares away from Costco directly. Currently, Costco's only competitors are Walmart, Sam's Club, and Amazon Prime. Sam's Club is still far behind of Costco in terms of scale and operation level, and the target population of Amazon Prime is also very different from Costco. So, Costco can hardly see any competitors in the short term. In addition, Costco is also a cash cow. Costco's operating cash flow in the fiscal year of 2020 reached $8.8 billion, up by 40% from $6.3 billion back in 2009. The operating cash flow basically refers to the cash earned by Costco through its net operation. For listed companies, this indicator is normally more convincing than the net profits. Costco's financial health is excellent because of its large cash pile and cash production capacity. Costco just recently paid a special dividend of $10 per share, which has eaten up $4.4 billion of the company's cash. This is the fourth time that Costco has posted a special dividend in the past 8 years. It comes out every 2 years and more each time. Now, excluding the $4.4 billion in dividend payments, the company still has $8.6 billion in cash. While all of its short and long-term debt adds up to about $7.6 billion, the fundamentals of the company's finance are still reassuring. The most important thing about Costco as an investment, in my opinion, is that it's extremely defensive. When the economy is good, people need Costco. But when the economy is bad, people need Costco more. It has to do with Costco's business model. We know that Costco makes money on membership fees, and Costco's annual membership fees won't go down just because of the economy is bad. On the contrary, when the economy is bad, people tend to stock up more, and demand for Costco's membership tends to rise rather than fall. In addition, Costco has consistently increased its membership fees of $5 to $10 every few years. All these factors make Costco's business performs extremely stable. This is also reflected on the stock price. Costco's stock price rises steadily during the bull markets, and it tends to be very resistant during the bear markets or market turbulence. We can see this in the panic selling in March last year. When the market fell more than 30%, Costco's stock price only fluctuated slightly, and then it continued to rise up a few weeks later. As we have analyzed many times before, although the general trend of stock markets in 2021 is still very positive, the process is likely to be very bumpy. Sustained gains like those of the past years are hard to continue. At this point, owning a stock like Costco, which is defensive and sure enough to benefit from the market's volatility, even if it doesn't guarantee to make you rich overnight, but it will certainly make every night a happy sleep for you. But when it comes to Costco's defensive nature, I need to explain a little bit more. I know that some people might question Costco's defensiveness given the recent pullback in the stock price. So let's look at it in two ways. On the one hand, the nature of any investment in the market is not absolute. Otherwise, investing is going to be very simple. Therefore, we need to pay attention to what has the highest probability in the long term. On the other hand, Costco's stock price pullback was not only because the market pulled back, but also because its financial performance fell off expectation. Costco's financial results were worse than expected this quarter, and its stock price has pulled back nearly 15% from its peak, due to a large amount of employee subsidies during the pandemic. as well as a lot of one-time expenses to deal with the pandemic. For me, this doesn't stop me from being bullish on Costco. It gave me a great investment opportunity. It was during this pullback that I chose to increase my Costco holdings. As far as I am concerned, this profit is less than expected and is mostly a short-term event that will not affect Costco's long-term cash flow. Finally, let's look at Costco's risk as an investment. One of the criticisms of Costco is that its valuation is too high. Costco's PE ratio remains above 30 times all year round. Even after the recent pullback, its PE ratio is still stand at around 36.5, still higher than Walmart's 28 and Target's 23. However, Costco's expensive for a reason. After understanding all the business models and investment logic mentioned above, you should also realize that Costco has a deeper moat, strong bargaining power, and a higher certainty of the overall fundamentals than other retailers. Because of these properties, a higher valuation is quite reasonable. But how high is reasonable? Well, that's a matter of different opinions based on different person. I personally like to compare Costco's valuation to its own. As you can see from the chart below, Costco's valuation is now higher than its average over the past 5 years. If you look at Costco's valuation over the past year in this ultra-low interest rate environment, plus the market's valuation has risen due to the recent low interest rates, Costco's valuation is very reasonable. Another risk Costco is facing is that the trends towards to online shopping. Costco may have been the best retailer to defend against Amazon's onslaught over the past few years. Because of its volume and low prices characteristics, Amazon and other online retailers cannot replace Costco. But as the market and society keeps developing, the millennial generation is occupying the mainstream of the society. The convenience and the change of consumption habits brought by online shopping may overwhelm Costco's unshakable characteristics of volume and cheap prices, and therefore impact its business. At the end of this video, I want to share with you my logic for investing in Costco. First of all, one of the most important reasons I own Costco is to diversify my assets, and to spread out the risk of my positions. For me, the counter-cyclical nature of the retail sector is an essential part of any investment portfolio. If you ask me to pick a stock in the retail sector with the best short-term growth potential, I did probably pick Home Depot. But if you ask me to pick a stock that would have the best performance 10 years from now, I would definitely pick Costco without hesitation. By owning Costco shares, I don't expect high growth potential from it. Rather, I look more into its certainty. After being in the market for a very long time, certainty is often more attractive than high growth potential. It's very uncertain whether you can actually earn from high growth potential or whether you can actually hold it for that long time. But for high certainty, it can bring me stable returns. It's also very suitable for using some investment techniques to increase my returns, such as the option trades. The market has been playing the devil again lately. It goes up and downs and makes investors getting lost. In the case of bottom hunting, I would hesitate to pick the bottom of high growth technology stocks that have fallen sharply recently. Because of those companies are inherently risky and so influenced by the market sentiments that I don't know, and I don't want to spend that much time studying them. But I dare to pick a bottom of Costco. I've owned Costco for a very long time, and my investment logic for such certainty is to buy on the dips and hold them for a very long term. I can also use the option strategy to earn some extra money if I did like to. After all, who doesn't like steady return? If you like my videos, please click the subscribe button. Your supports are much appreciated.